Alrighty. Now, what I just showed you with the debits, the credits, and the journalizing, we're going to do. So, there are 4 steps you take. First, you identify the transaction and any source documents. Then you analyze the transaction using the accounting equation. Then you record it in a journal entry using double entry system. And then you're going to post it to what normally would be general ledger accounts, but we use T accounts because it's easier to see. So let's see what we've got here. We have identified Fast Forward is receiving a $30,000 check from the owner in exchange for common stock. So what do? First of all, you'll look at the accounting equation. Okay, that's an increase in cash, right? And an increase in common stock. Okay, so assets are increased with a debit. Look at your sheet. Common stock is increased with a credit. So our journal entry becomes cash, 30,000 debit, common stock, increase, credit. Okay, so step 1, 2, 3. Now this is posting to the general ledger. So in cash, it's on the left-hand side, it's a debit, we put 30,000. For the common stock, in the common stock account at 307, we put 30,000. The equation is balanced. If we were to pull off financial statements right now, my balance sheet would read cash 30,000, cash or stock 30,000, equity. So my assets would equal liabilities and owner's equity. So that's how we start this. Let's look at another one. Can you see how it all ties together now, everything we've been doing? We bought $25,000 worth of cash for the supplies. Again, look at that worksheet and analyze. Okay, cash is an asset. I'm using it, so I have to subtract from it. So that's a negative. And supplies, I'm increasing. So what does that say about debits and credits for my journal entry? Well, supplies are an asset, so that gets debited for $2,500. Cash is an asset, and I need to decrease it, so it gets credited for $2,500. Then, if you are posting this to the general ledger at the same time, you would put $2,500 on the left-hand side of the account, and $2,500 on the right hand of the account for cash. Now if you were to pull the financials off, you would show your cash at $27,500, supplies at $2,500, and owner's equity at $30,000. Those two would balance. Try another one. Here you go, one more. We purchased equipment for cash. Well, it's the same thing as purchasing supplies. Only now I am subtracting. I have to deduct my cash by $2,600 and increase my equipment by $2,600. Cash is an asset. It's decreased by a credit. So the credit comes down here. Equipment is an asset. It's increased by a debit. So I debit it. Debits always come first in the journal entry. So now I have equipment debited for 26, cash credited for 26. And again, when you post, this is how you post, 2,600 debit in equipment and 26,000, I'm sorry, this is 26,000. And this is 26,000 for a cash decrease. Making sense here now? Another one, we purchase supplies on account. Now when we do it on account, what are we doing? Let's analyze it. I've increased my supplies, so we know supplies is going to be debited for $7,100. And now whenever I say on account or on credit, when I'm buying something, it's going to be accounts payable. I need to increase accounts payable. So if you look at your sheet, anything on the right-hand side of the equation is increased by a credit. So accounts payable becomes my second account, and it's increased with a credit of $7,100. Again, looking at the accounting equation, things are balanced, right? So when I post this to my general ledger, I have $7,100 increase in supplies and a $7,100 increase in liabilities or accounts payable. So if we analyze this one they invested $4,000 in a company. We increase assets, increase liabilities, or owner's equity. Here's the journal entry. Here's the posting. And we look across the bottom. And you can see that this will all balance out if you were to write it out in the equation. Another one, they purchased $2,000 of equipment on account. Asset increases, right? And I have to increase my liability. This becomes my journal entry. Equipment increases by $2,000. Accounts payable increases by $2,000. Here's the posting. Equipment, debit $2,000. Accounts payable, credit $2,000. One more. And the company provided $540 of service to a client on account. Well, typically you would get money, but now they've charged it. So that brings up an asset increase of $540, and that asset is an accounts receivable. And I'm going to increase my equity, right, because revenues increase equity. To do that, I want to increase accounts receivable with a debit and increase revenues with a credit. Again, when you post, you've got accounts receivable, 540 increase, service revenue increase. Now remember, anything on the left-hand side of the equation, which is an asset, if you're going to increase it, is a debit. In the equity, anything on the right-hand side, to increase it, an equity account would be a credit. And that's basically what you do. We've been doing the worksheet, but now we're going to write it down formally and start expanding it out into a system. So we're going to stop there. We're going to stop there. Then I'm going to do a review on the debits and the credits. And then we'll start in on, we'll do the review now on the debits and the credits. So we're going to define those. I'll say it one more time. A T account represents the ledger account we've been playing with. So if you're looking at a T account, the left-hand side is a debit. The right-hand side is a credit. In a double entry system, if we were looking at cash, on the left-hand side, anything that increases cash is going to be recorded. Anything that decreases cash is going to be recorded on the right-hand side. You will get this, but keep that paper that I sent you. It's very important because then you don't have to get all confused in your mind. You can look at the paper and immediately see what you need to do. Okay, now I'm done. Now we'll move on to the trial balance.